Well, good day, all. Ira Epstein, and I feel like we're in the day after, one of those crazy things like it could be anything, but it's wild. Today is Thursday. It's the 14th of December. We've just gone through a host of central bank action, and now it's time to analyze, figure out what to do, and understand that here we are, Thursday night, getting on at 6 o'clock at night. Tomorrow we have a full day. Next week is the last basically full week of trading till we get into the Christmas and New Year's period. And then all of a sudden you're in 2024. Today we saw that the European Central Bank and the Bank of England are still stuck fighting the inflation. That is bullish gold, not bearish gold. Why? The sticky inflation, the problems with it, but yet the monster, the United States in terms of world economy size, is saying that our economy, we can afford to see the market start rolling down and interest rates falling. Give you an example. You were just at 8.02% on 30-year mortgages. You're down to 6.9%. Wow. And I just read a Redfin report. They think you'll be quickly down to 6.5%. That is substantially different than 8%. And that's going to do what to the housing market? I know a lot of people think you're going to get all these homes coming on the market. Not so, in my opinion. But we're commodity people. You'll get people that put their homes on that couldn't sell them or miss the end of the market. But a guy at a 4% mortgage isn't ready to go up by over 50% on his mortgage payment. If he's done his work, he's staying where he's at for a bit, which means it's more able buyers chasing, yes, a few more homes have come on the market, but I doubt we'll get a flood just for the reason I told you. Well, that's how it works in trading metals too. You have to understand where you're at, when you're at that point, and what you're doing. Look at, for example, copper. It came back to almost $3.90 a pound. Now, energies, they came up today. Why? Because a rising tide lifts all ships. And basically when the stock market exploded over the past, really, all of November and now, eventually this final leg just couldn't keep everything down. Is a lot of this right? Probably not. I don't see what's changed on the energy market to have made today's rally, but I get it. And you never fight the tape. Tape said to do that. Well, okay. But I look at what the metals are doing, and to me, there's two headwinds that gold had, and now I think they have tailwinds. Number one, they have lower interest rates coming out of the U.S. and a lower dollar. Those are your tailwinds now. And that will probably, because inflation is still there, be supportive overall to gold. And no, it doesn't have to explode on that, but it can work higher. And we have a new number to get up to, about $100 an ounce over this, that the market was just at. When we take a look at the gold chart, you're still well over the 18-week average of closes. When we take a look at what the market's doing here, you can see the top. I won't call it a blow-off top because I don't think it was, but it certainly caught the traders. And it went down over $150 an ounce. And now you're getting a pullback, and it'll be interesting where that's at. And I'll show it to you in a minute. The pattern is a lower low and a higher high. And what you really did is you broke the downtrend yesterday. I showed this to you and I want to repeat it. Lower highs, lower lows. You broke that down pattern. Then the market came in, and this was Wednesday, because you closed at 12:30. Settle is the right word. You settle the market at 12:30. You closed trading at 4 o'clock. But the settlement price was then. Well, that didn't even take into account the Fed meeting at 1 o'clock, let alone the press conference, when I think we all got blown away with what happened. And this is what happened today. You end up getting as high as 2062, probably a little overdone, but you can see where you came back to. And guess what? The market's fighting again at the 18-day average. So I think you just plain got overdone down here. And like you got over the Bollinger Band here, you couldn't even make it to the lower band, but it's got two levels of support, the lower band and the 100-day average. So I think that washout in gold is over, and now what we need the market to do is give us new setups to consider getting long. Before I get too far, because we've got more charts that I want to go through with you on this, gold's going to look at the dollar. So what I did this afternoon is I said, let's do a special report on the dollar. It'll be through there for the weekend on the website. It'll be off Monday or Tuesday. It'll be gone. Here's what I did. I looked at the dollar from the perspective of seasonals, and then I started stripping out the 30 and the 15 year. I said, let's look at COVID over the last 5 years that we've been living with it. Did that. I then went into the weekly charts, the daily charts, put it all together with price counts. So you got your seasonals, your longer term chart off the weeklies, the dailies, and then the price counts that have some interesting numbers that are objectives. How do you see the report? You go to our website, iraepstein.com. It's a video report. It'll be under the word research when you go there. You can always click up here to get there as well. It is time sensitive. This will be off probably Monday evening. Today's the first day, second day. I doubt you'll see it Tuesday, so be aware of that. Normally I'll put them out on a Friday. You get a little more, but with Christmas and all, I wanted to get this done earlier for you, and it's very, very important. So we take a look at where you're at in your momentum. You were oversold, came down, challenged the key average back up. You're not trending right here, but I think you're going to. I think the trend's going to end up back to the upside for the reasons I've given you. Inflation sticky, lower U.S. rates, and probably a lower dollar. When we look at the gold-silver ratio, you're still over right here. The 18-week average, well, I take that back. This is a daily chart. 18-day average of closes. If you close under that, that's a good sign for silver. Now, for you silver bulls, I know you want to thank me. I was telling traders right through here, start in this zone, right as I'm pointing, that they could buy those mini contracts. I said, I don't know if we'll be right or wrong. I think we're wrong. Get under this low, and you're most certainly wrong if you get under that low. But I think that if you're accumulating, this could be an interesting play because you could be back up at that upper Bollinger Band I'm hoping, that doesn't mean I'm right, I'm hoping the first quarter of the year, and that'd be a heck of a move from there. A couple of dollars an ounce is a lot in the silver market. In the copper market, I was blown away today. Not in the market, nothing there, pro or con, but you went all the way back to the Bollinger Band, which is where you'd typically fail on these moves. And this was the profit-taking area in the platinum. Platinum market set itself up perfect. It sat there. The risk was about $1,000 a trade at some point. I didn't like that, but it's right up to the area where it should be encountering its first real resistance, the 200-week average, which the first challenge is generally a rough area to clear, and the combination with the Bollinger Band and overbought, I'll look at something else. As for the dollar, you want to see my report, but the market rode and challenged after it got underneath here, coming back to the 100-day average. It stayed under it and fought a battle between that and the 18-day average. And 2 days ago, you had where the market capitulated. It got under this low of 102.87. Today to the Bollinger Band. You know what I'm going to tell you. What are the odds of staying under a Bollinger Band? Okay? So would I tell anybody to press the short side? No. But in my report, I show you what I'm expecting and how I think we're going to be able to handle this market. So go to iraepstein.com. Under the word research, top right, you'll see it up there. You'll see a special report in the currencies. It's about a 15-minute video. I put a lot of work into this one. Take a good hard look. I'm Ira Epstein. I'll see you tomorrow.